A global economic collapse is certain, and now the IMF has warned of mass default occurring. You came here for the truth, so let me unveil that for you. We're going to get into what the IMF said, what they have been warning about in recent years, and how this is all interconnected. The debt is a huge problem, not just for the US, but for the emerging markets as well. So let's begin with the Telegraph article talking about the IMF issued a double warning over higher US interest rates, which it said could trigger a wave of emerging market corporate defaults and panic in financial markets as liquidity evaporates. This is a very real scenario. Now, the IMF has come out and said various things before, which are not necessarily the most accurate. But I would definitely say that in this case, we have a serious thing to worry about. The IMF said corporate debts in emerging markets ballooned to $18 trillion last year from $4 trillion in 2004 as companies gorged themselves on cheap debt. We know specifically that all of these corporations, financial institutions, tried to profit off of these so-called financial instruments when we know specifically they knew they would get bailed out. And of course they did, and they will again and again. It said the quadrupling in debt had been accompanied by weaker balance sheets, making companies more vulnerable to U.S. rate rises. They're worried about the Federal Reserve increasing the interest rates. Well, if it's anything like we've seen over the past few years, we know specifically they're not going to increase the rates so you can continue to party. As advanced economies normalize monetary policy, emerging markets should prepare for an increase in corporate failures. That's according to the IMF. I don't see any increasing in the interest rates. I don't see any reduction in QE. So what are they talking about in this case? I only see things getting worse. China's president on Saturday pledged billions in aid and said Beijing would forgive debts due this year in an effort to help the world's poorest nations as world leaders begin to seek trillions of dollars needed to help achieve sweeping new development goals. See, it's interesting the way this works. You and I, you can't get a pardon on your debt, but if you have some sort of favorable deal with a particular country, they can do that all in between themselves and figure it out. A little bit hypocritical, I would say, because the debt is where we're at in the first place, why we have such a big problem, and it's individual debt, it's national debt, it's provincial, it's state level, county level, every single level, there's too much debt. Why? The system runs off of debt. There's more information here if you want to read about the UN and so forth, but I want to move on. This is Petraeus, an article about Petraeus and others as well, but I wanted to get into the points that Rickards made. Of course, his book Currency Wars, excellent. And what he's talking about is the financial fears overblown. He said a couple things that, I really should take into account here. Rickards, who advises the U.S. intelligence community on capital markets, believes China's huge treasury holdings give it very little leverage over the U.S. Now, this is contradictory to what we've always said, but he does make some good points. China doesn't want to trash its holdings, and if they did anything malicious, the president could stop them with one phone call by freezing their account, he said. 1977 law, known as the International Emergency Economic Powers Act, we've all heard of this one, gives the power to the president to regulate commerce during times of economic stress. And George Bush apparently used this on 9/11 to block money held by terrorist organizations. Always going to be an abuse of power, that's for sure. Now, I don't necessarily agree with everything Rickards says, although he generally is on point. This is quite interesting and something we need to think about. In my book, I wrote about similar topics, talking about how China owns much of the debt of the U.S., obviously being the biggest foreign purchaser. As of the last few decades, the U.S. has been able to continue to consume at an unbelievable level because debt is being purchased mostly by China. Of course, I'm excluding the Federal Reserve here. China, among others, are financing the American consumption bubble, which leaves certain instability in the future. If China's not buying, guess who is? That's right, the Federal Reserve. Let's look at this very quickly. Emerging market economies, evolving capital structure. You're looking at the corporate debt and the market cap in billions of dollars. Something to think about. Are companies more heavily in debt? And if that's yes, but they're basically worth more, then it sort of balances out. But what happens when there's a market crash? People pull their money out. All of a sudden, you're left with more debt and not enough real wealth behind it. Then you look at this. CNBC, Greece aims to initiate debt relief negotiations before Christmas, but the power dynamic in the Eurozone won't allow Cyprus to get the best deal he can to relieve the country's debt. He's right there talking to none other than the US. Look at this. Cyprus has received valuable support from the Obama administration in recent months. Very interesting, to say the least. We'll have to see where that goes on Greece. Don't have too much information. I'm going to move on quickly. US primary dealers' corporate bond inventories have decreased significantly since the crisis. Think about this with the U.S. primary dealers' corporate bond inventories. Think about it as, in a way, all these garbage financial instruments, as they call them. This one in particular, their bond inventories, as they say, have declined significantly going back to 2002 levels or even before. Just one more chart really to think about. Let's move on to something more substantial. Brazil is extremely concerned about companies that have debt in dollars. It's according to the president there, told reporters in New York after volatility in the country's foreign exchange market last week reached the highest level in almost 4 years. I've been covering that right here. What they said was Brazil today has sufficient reserves to avoid any problems in relation to disruptions because of the real. This is Rousseff saying this, and of course they're there to reassure the public. Rousseff said Brazil is better prepared to recover from this year's recession compared to the last crisis because it has $370 billion in international reserves. What I want to say about this is that $370 billion today really isn't that much. You can see that vanishing very, very rapidly if we have a big crisis. The rich are richer than ever. Forbes' list of the 400 wealthiest Americans reveals Jeff Bezos made $16 billion in a single year. The rich are unbelievably rich right now, and that is only a very few select people. We're not talking about millionaires here. We're talking about the elite. We're talking about the multi-billionaires, and they are making more money than ever. There are more billionaires now than ever before, but then you see the millionaires becoming less and less. Why? Because there's a massive divide that has been growing and growing and growing, and guess what? We're not part of that. We're getting on the bottom end. We are becoming part of the lowest class. That's just the way this works. It's all because of the debt-based system that they've set up that I've been covering here today and in previous videos. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon. You can flip through the book for yourself and see if you like it. Take care.